What's up everyone, welcome back to my channel. I'm filming outside, so please excuse all of the sounds that you might hear in the background. Think of it as the neighborhoodly sounds that is very common. So excuse me, I'm gonna chase away that bird. I'll be right back. Okay, so today's video is gonna be about investing passively into the stock market via Robo Advisors versus DIYing it ourselves. And I think I wanted to make this video for a while now because when I first started investing, I really wanted to access ETFs in a DIY manner. But I came through a lot of stumbling blocks, and I guess I wanted to paint out what it's like when we are actually choosing to invest in these different styles, whether it is robo versus DIYing, and what does it take to make those decisions. So I wanted to walk you through like the step-by-steps of what you need to take into account for when looking at these two methods. So let's get into the video. So for Robo Advisors, I think we are very familiar with this, but to recap, Robo Advisors, to me, they are fund managers where they charge a fee for us using their service, and they invest our money in a portfolio of ETFs, which are exchange traded funds, and they choose the mixture. And what makes a robo is that they have this technological aspect to it, and they have algorithms, mathematical equations that make the decisions for the platform. And because of this, they are able to optimize and automate their processes, and yeah, I guess like it's a very nice, seamless way of investing our money. So when we are looking at Robo Advisors, I think it comes to no surprise to you that I am actually quite a big fan of this particular Robo Advisor that we have here available in Malaysia and Singapore, and that's Stashaway. And the reason why I like them is that I actually had the opportunity to test it out before putting more money into my portfolio, and it was kind of like a trial period for me where initially I just put 250 ringgit every single month into my portfolio, and after about a year I realized that it's very decent, very good way of passively investing into the stock market. Why I like Stashaway is that they appear to be the market leader, and they have just recently announced that they have achieved $1 billion in assets under management. So that's super great news, because as an investor, I want to know that the company or that Robo Advisor is able to be solvent, is able to sustain itself and thrive as a business because people are choosing to invest in them, and that they can make money along the way while they are helping us grow our money as well. Okay, so how do we decide when we are investing into a Robo Advisor? The thing that comes to mind straight off the bat is that we need to pick the platform, we need to pick which Robo Advisor we want to go with, and how I would actually go about this decision making is to look at what's available in our country, what is the selection. Most importantly, look at the asset mix that they have in their portfolios. Are we interested in them? Does it sound like our money would grow well with this mixture of assets or ETFs? And then, can you trust this Robo Advisor? Are they going to be sustainable as a business in the long term? And normally what I really like to go for are the market leaders, and also to have a look at who are their management team. Do they seem like cool people? And so far, I really like the Stashaway team. You know Ken, you've seen him in my videos, and I had the privilege to speak with Amanda, which is Singapore's Stashaway's country manager, last year, and I think they're a really bunch of lovely people, and they also really know what they're doing. A step that I highly recommend is to ask yourself, why are you investing in the first place? And for me, it is a very underrated step, because if you know why you're investing for, and you know what does it mean to you, you get a clearer picture of how long do you want to have your money within this system, and what's it gonna take for you to actually take your money out. So it gives you more clarity on your strategy as well. So don't forget to take that step of asking yourself, what are you investing for? So after picking our platform, what happens is we will choose our risk profiles, or in Stashaway's case, it's risk index. And what this does is it helps the Robo Advisor actually sort us out into a category where they can recommend a portfolio to us. And I guess like this is something that we need to be very truthful about, because what we've learned in the past is that when markets are going well, we're very optimistic. We say, hey, we can take on so much risk because we would like that sort of high returns. But when markets are doing really badly and you're seeing your portfolio go into the red, and in terms of like paper losses that look huge, you tend to freak out. So be very honest in what you are able to stomach in terms of a risk index, and also look into what assets are within the allocation, because it really changes based on your risk profile. So in the lower risk profiles, you're going to see a lot of bonds, and you're going to see the returns to be around there, around like 2% to 5% conservatively, whereas in the higher risk profiles, you're going to be taking on more risk and you're going to see higher returns, hopefully. And by experience, it's been like that, right? So after that, you're going to pick your strategy. And the strategy that you want to consider is how long are you actually going to be investing for, and how do you want to go about it? Do you want to do a lump sum investing? Do you want to do monthly top-ups? And how much are you going to top up? And personally, I think this is a very nice way to do dollar cost averaging, which is the strategy that I picked out. But maybe you're different and maybe you would like a different approach. Also, another note on the picking the platform site. So you're gonna need to research everything you can about this platform, and what are the benefits of using it, what are the downsides of using it, and what are the costs involved. So the thing about Robo Advisors that I really like is that they keep the costs very, very efficient, very affordable for us regular investors. And that's something we won't be seeing on the DIY side, because we can invest in ETFs through Robo Advisors. Like, we can invest 100 ringgit every single month, and they are able to buy and allocate that money for us. But if we only had 100 ringgit to invest in individual ETFs, we won't be able to buy much or anything at all. So that is the main difference. And I just got an email from Stashaway just now, and I found it really funny. We are in the Lunar New Year season, and Happy Chinese New Year to all of you who celebrate. What they emailed me was that we have coupon codes for you guys, and when you invest money in this time period up till late February, they have coupon codes that enable us to have 1 month off of management fees when we achieve an investment amount of a specific amount. I think the minimum is like 1,888 ringgit. So I found that very, very smart as a marketing tool, because they are putting it into the front of my mind before I actually receive ang pao money, or the bonus money or salary increase that I received. They are saying, hey, you're gonna need to invest this money, and I've already planned it for you. And oh my god, there's an ant on my camera. They were smart to go about it this way, so they're always at the forefront of my mind, even making decisions for me before I realized that I needed to make them. So I found that funny, and I will link my referral code down below if you haven't already signed up for Stashaway, in case you want it. But I digress, because we're gonna move on to passive investing, DIY style, into ETFs ourselves. And this one was the route I actually wanted to take, but after seeing all the steps that I needed to go through to take this path, I decided against it, and I think it's going to be very clear why. So in order to DIY invest into our own portfolio of ETFs, we need to make very similar decisions again. We need to pick a platform that we can buy our ETFs on, and this platform actually needs to be able to allow us to access the ETFs. And 2, we actually need to pick the ETFs that we want ourselves. And of course, this requires time and effort, and you need to pick how many ETFs do you want in your portfolio, and what are the kinds of ETFs you want in your portfolio. After that, you're going to need to decide the allocation of each ETF within your portfolio. And I guess after that, you're moving on to the strategy again of how long are you investing for, how much are you investing, is it every single month, and is the process actually smooth in the reinvestment side. And I guess like one thing to note here, even though it sounds very similar to the steps of Robo Advisor investing, there is a key difference here, which is when you transfer money into your broker platform, there are fees incurred there. That's one. And then two, when you buy individual ETFs, are you subjected to lot sizing? So if an ETF requires you to buy in lot sizes of 1, how much of money do you actually need every single time that you reinvest into the ETF? So to give you an example, if I were buying the IVV or VOO ETF, which is the S&P 500, again, you already need to choose between them two, right? There are 2 different S&P 500 ETFs that you can access. I think there are more, but these are the 2 that I know of. You technically need to spend $300 over US dollars for that one ETF. And do you have that kind of money every single month? Because you're probably not just buying one ETF. If you have a portfolio of ETFs, maybe you have 3, maybe you have 5, that means every time you invest, you're gonna need a couple of thousands of ringgit or dollars even, and that's the challenging part, right? Is your budget able to stretch for that? And on top of that, it is more work, because you know, if we're just looking at passively investing into the stock market, how much work do you want to do? And I guess like what I decided in the end was to save that amount of work for investing in individual companies, and that's where I'm willing to do the trade-off, which is to invest in ETFs with Robo Advisors due to, you know, all those cost advantages, and I get to save a lot of time. And then on the other side, I am able to invest in individual companies not every single month, because what I can do is I can stockpile my money and make it to a point where it is substantial enough to transfer into the stockbroking account. And it also has the advantage of being able to time when I actually buy into the company, because then I am not utilizing that strategy of dollar cost averaging, and I'm actually looking at a good price to buy the company for. That makes sense to me. So I guess it's really clear to see which is my preference when it comes to Robo Advisor versus DIYing for passively investing in ETFs. But again, I wanted to explore the steps between them both. And I don't know, I hope you find this video useful, and I will see you in the next one. Bye!